I'm now going to say something that will astonish you.
Ich bin ein Berliner.
Nein, niemals!
I have a dream.
Mr. Gorbachev, tear down this wall.
We are living in an increasingly polarized world.
My administration has accomplished more than almost any administration.
We must begin now.
Welcome to the Bulletin Podcast.
Ladies and gentlemen, welcome to a new season of the Bulletin Podcast. This is your producer, Hussein Al-Mallah, and here's what's coming up.
So the rise in price was absolutely insane. I think it was around 1700% or a 17 times increase over 2 weeks. They thought that as a group, they could force the institutional investors, namely hedge funds who made bets that the price of GameStop would go down, that they would force them to buy shares at these higher prices.
Well, hello everyone and welcome back to the Bulletin Podcast. This is Jesus Renzulo and I'm with
Caroline von Stein.
So, Caroline, we're finally back to the Bulletin after 2 months of vacations.
It's great to be back. I'm so happy to be able to see you in person, Jesus, and see all of the other students in person as well.
Yes, it is great that the university and in general, like the countries are finally opening up back. And it's good to see that they are putting not only the protocols to maintain us safe, but also they allow us to gather more, to see presential classes and all that kind of stuff. But one thing that I was seeing while we were on vacation was that many aspects of finances are going crazy. We saw in January this big boom of Bitcoin and the problem of the GameStop stocks. And now again, last week, the Bitcoin passed its threshold and reached $60,000.
But we're doing a public policy program. So what does this have to do with policy?
Well, I think that everything, many of the reasons that financial markets work is because they have some kind of regulation. We learned in the financial crisis of 2008 that markets can just be left free because there are some problems that need to be taken into account and there are some things that need to be kept in check. And I think that we need more public policy analysts that know about financial regulation, that know about financial markets, because that's the only way we can keep those problems in check. And that's why I think we are so happy to have this new episode.
Definitely. I think a lot of the inner workings of the financial sector can feel very opaque from the outside. So I'm really happy that we have a guest today who will hopefully shed some light on these inner workings. Today we have Bakhtiyor Tukhtabaev as a guest. He is a Brandt School alumni from the year 2011 and is now a senior professional with more than 6 years of experience in the financial services industry, as well as 4 years of experience in the public sector. As a senior business analyst, he is engaged in analyzing and understanding the ever-changing EU regulations and implementing it in existing business processes. He obtained a bachelor's degree in economics, but of course he also has his master's in public policy. So this combination of experience will hopefully help us unpack some of the crazy things we're seeing in the financial sector and in this past year.
I completely agree, and I really like the idea of a public policy analyst getting into the private sector and working with it because it brings a new perspective. So let's see what Bakhtiyor has to say.
So, hello Bakhtiyor, how are you?
Hello, Jesus. I'm very well, thank you. How are you?
I'm perfect. Thank you so much for being here with us today. As a former student of the Brandt School and as a person that is already working in the area of finances. Well, we are quite interested in some developments that happened in January and that basically are still happening and have many people puzzled. Talking with what happened in January regarding GameStop. This thing that shares of a company that was basically thought bankrupt started to go up and up and up and up, and nobody knew why. And I wanted to take a little deep into this discussion of how this happened and why this happened. Can you give us a little insight about it?
Sure, it's a very interesting topic, and I guess this topic alone actually could make a whole podcast um, because there are
Agree.
really a lot of things to say. So what actually happened in January this year? We've seen a significant price explosion for GameStop. So the rise in price was absolutely insane. I
Hmm.
think it was around 1700% or a 17 times increase over 2 weeks. And to give you some context, Moderna's stock, for example, went from 20 to $70 when COVID pandemic began, and that
Hmm.
is only a 3 times increase. So what is so special about GameStop?
GameStop.
Basically, this company is a video game retailer which sells games, consoles, and other electronics. And usually you can find GameStop shops somewhere in a shopping mall, maybe next to a Zara shop or a
Hmm.
McDonald's. And so companies of this size do not usually go up by 1700%. So nothing actually specific or exciting about GameStop. Moreover, as you mentioned, it was even not doing very well because of the
Hmm.
COVID pandemic. And GameStop was also losing to other online game retailers like
Of
Steam
course.
or Amazon. So what actually happened was that the price was driven up by retail investors.
Okay.
And retail investors are ordinary people like students, teachers, bakers, truck drivers. Basically, they are non professional investors who trade occasionally, and they're just people you see on the street every day, as opposed to the so called big fish, the trading experts who work for hedge funds or banks and who make trading as a profession. So those small investors, retail investors, actually self-organize themselves in a
Hmm.
social media platform called Reddit. And the
Okay.
users of this platform decided simply to start buying GME stocks for the following reasons. First, they thought that the fundamentals were better than the price would suggest. And most importantly, and that's what makes this case so special, they thought that as a group, they could force the institutional investors, namely hedge funds who made bets that the price of GameStop would go down, that they would force them to buy shares at these higher prices. And that's called a short squeeze.
Okay.
Um, as a result of this, so to say, protest from the retail investors, we have seen the price of GME. It went from $20 to $450 in a couple of days, bringing a mind-boggling 17 times increase. Um, so that's actually what happened.
And basically the crisis or this outcry from the formal investor is because most of these hedge funds work against the GameStop. They were betting against the shares, right? And that
That's
crashed many
correct.
hedge
Yeah.
funds. That's
Yeah. Yeah.
so interesting because of course we always think that financial markets are rational, people are investing according to what is the value and the possible
Yeah.
growth of the companies,
Yeah.
but this was completely different. This was more like a self-organized based on morals. And
That's
yeah,
correct.
basically we have this weird kind of development, and that's what
Yeah.
brings me
Yeah.
to my next question.
Uh-huh.
So we are told that financial markets are rational, but
That's right.
events like this, and not only like this, but things like cryptocurrencies and that kind of stuff, they tend to
Hmm.
go against the main theories of financial behavior, of financial markets behavior. So in your
Yes.
opinion, how rational really are financial markets, and are there better ways to looking at them besides completely rational optics?
Yeah, so I guess here we're going to talk about the eternal debate
Mhm.
between the theory of rational markets, or which is often called the efficient market hypothesis,
Okay.
against the theory of behavioral finance. So let's quickly take a look at the main postulates of the efficient market hypothesis. Here on forward, I will call it just EMH. Um,
Okay.
so the first postulate of the EMH states that share prices reflect all information. This means that everything what is known to us about a certain security is already included in its price. So any earnings ratio, any regulatory adjustment, or any other company news has been already reflected in the price.
Okay.
Then EMH uh, says that stocks trade at their fair market value.
Okay.
So this makes it impossible for investors to purchase undervalued stocks or sell stocks for inflated prices. Therefore, it should be impossible to outperform the overall market through expert stock selection or market timing. And the
Okay.
only way an investor can obtain higher returns is by purchasing riskier investments.
Okay.
Last but not least, the cornerstone postulate of the EMH is that investors in the stock market act rationally. So those are the main pillars of the EMH. And what are the arguments of the opponents of the EMH? And this includes myself as well.
Okay.
Perhaps one of the strongest arguments of the opponents is Warren Buffett himself, because he has consistently beaten the market over long periods of time, which by definition is impossible according to EMH. Moreover, he has done this by investing in undervalued stocks. In addition, in the modern day, we have quite a bit of portfolio managers who have better track records than others and than the market on a consistent basis. Other arguments which contradict the EMH and explaining that market inefficiencies do exist are the following. So markets are inefficient because we have information asymmetries, which means that not all investors have the same information about a security, a lack of buyers and sellers for certain instruments, which means that there is low liquidity, market psychology, I would say human emotion, and last but not least, it's my favorite argument, it's the cultural factors among investors. At the moment, in the 21st century, we are able to see a significant increase in retail investors. So access to markets is very easy in the modern day, low transaction costs, and ability to trade from home. Because markets have opened themselves to people all around the world, we have here a cultural factor as well. So having the same type of information about a certain security, probably a non-professional investor from Japan or Australia would trade completely differently to a trader from Germany or say Venezuela. And probably my final remark to this question, I would say that if the markets were indeed rational, even in the long term, there is a very good saying among investors, which I think can answer this question very well. So this saying is as follows. It says that the markets can stay irrational longer than you can stay solvent, which means that even if you have an idea that should work given fundamentals and given the market rationality, the market price may deviate long enough that you run out of capital to keep the position open to prove yourself right.
So basically, in the long term, we are all dead.
Yeah, that's correct.
That's super interesting because it sounds so clear when you look at it from a theoretical base, and then you look at all these factors that are influencing, like culture, the fact that there are coming non-expert investors, the fact that in fact we have information asymmetry. Not everybody knows everything. And even though we try to regulate that and create, that's why we have laws against fraud runners and that kind of stuff.
Yeah.
We still do not grasp how irrational market can behave.
That's right.
It's super interesting, and maybe it's a thing that we need to start teaching more, not only in finances as a course, but in public policy. So
Yeah.
I wanted to continue with this topic because it's super interesting, but let's dig a little into another asset that is being a discussion topic for the last months, even now, as China is banning it, as
Mhm.
El Salvador declared as a
Yeah,
national currency, and that's
yeah,
cryptocurrencies,
yeah.
Bitcoin, and that kind of stuff. So,
Hmm.
what is the logic behind the rapid ups and downs of their prices? Uh,
Hmm.
Basically, if we had information, that wouldn't happen. Prices would
Yeah.
go down or would go up, depending on how much the real value of the asset
Hmm.
is. But what
Yeah.
is happening with Bitcoin in basics?
Yeah, sure. Maybe a little side note on what Bitcoin is, because
Hmm.
it's something not very usual. So
Hmm.
it's often described as a cryptocurrency and is a type of money that is completely virtual, and people can send Bitcoins to each other's digital wallets, and every single Bitcoin transaction is recorded in a public list called the blockchain. Some facts about the Bitcoin: according to the design of the Bitcoin, there is a limited amount of them in the
Hmm.
world, which is 21 million. And currently, we have already 18 million Bitcoins mined. However, we will reach the limit amount of 21 million of Bitcoins at the year of around 2140, because of this Bitcoin halving mechanism. And we'll come to that mechanism later. Um, during our discussion, I guess I will maybe skip the technicalities of the
Hmm.
Bitcoins, because that involves some really complex mathematics. And because I'm not really into mathematics, I guess I won't be able to explain the whole complexity of this mathematical problem, meaning
Don't
how
worry.
people generate Bitcoins. They need like very powerful computers who
Hmm.
will work on with full steam to generate the answer to that mathematical problem. And alone that, having a very powerful computer will take maybe several years to generate one Bitcoin. And
Hmm.
perhaps we um, maybe switch to analyzing the factors. Uh, what were the factors to such significant price changes in the
Yes.
Bitcoin? In the first place, I would say it's the infrastructure for the Bitcoin trading. So during Bitcoin's early days, um, the rise and fall of cryptocurrency exchanges, which is the infrastructure for Bitcoin trading. So
Hmm.
such exchanges, which controlled considerable amounts of Bitcoin, uh, they significantly influence the price trajectory of Bitcoin. For
Okay.
example, one of the world's first crypto exchanges, which is called Mt. Gox,
Okay.
claimed to have lost 850,000 Bitcoins because of a hacker attack, and filed for bankruptcy in February 2014. As a result, price of Bitcoin dropped by 32%.
So
Um,
basically, the stronger the infrastructure, the higher the price,
well, the more stable infrastructure is,
the higher
because
the
if
price.
you find out that there is no exchange where you can trade Bitcoins, the price of it obviously should
Goes down.
fall.
Okay.
Yeah. Another factor is acceptance of Bitcoin by world businesses. The Bitcoin's price was affected by mainstream online retailers. For
Hmm.
example, its price touched the 1,000 threshold in 2014 after an online retailer Overstock announced that it would begin accepting Bitcoin for purchases.
Okay.
Another factor is, as the world slowly accepted the emergence and importance of Bitcoin, each regulatory change among countries had a significant impact on its price. For example, when the US Securities and Exchange Commission announced that it considers Bitcoin as a security, and when at the same time Commodities Futures Trading Commission in the US has
Okay.
classified Bitcoin as a commodity. As a result, the price of Bitcoin soared, increased like significantly.
So
On the other,
basically,
yeah,
let me just to make sure that I'm understanding.
mhm,
As the Bitcoin becomes official in other
yeah,
institutions, it gains price
yeah, that's
because it
correct.
gains legitimacy.
That's correct. And
Okay.
because investors feel themselves more safe in trading this security.
Okay.
At the same time, if we look at China, I think the price of Bitcoin lately, maybe it was not so long ago, fell from 50,000 to 40,000 after Chinese regulators announced restrictions banning financial institutions and payment companies from providing cryptocurrency related services.
Yeah.
And now the last factor is something which we have mentioned before. It's Bitcoin halving. And I think it's actually the main reason for the price changes in Bitcoin. So according to the design of the Bitcoin concept, every 4 years, Bitcoin halving shall take place. This
Okay.
means that as time passes, miners shall receive less Bitcoins for their mining activity. Initially, back in 2009, it was the beginning of Bitcoin, miners were rewarded with 50 Bitcoins for solving this mathematical problem. Currently, the reward is only 6.25 Bitcoins. So correspondingly, every Bitcoin halving, which happens every 4 years, dramatically increases its price.
The price
And
of
this
Bitcoin.
is why having mined 18 million Bitcoins for like 10 years, we will reach the limit of 21 million only in 2145. So in the
2045.
year of 2145. Yeah,
Oh, okay.
because
2045. Okay.
yeah, so it took less time to generate 18 million Bitcoins, and it will take significantly more time to generate the remaining three.
Okay.
And so coming to the end of my answer, those were the main factors which historically have affected the price of Bitcoin. And as you can see, there are many objective factors based on theory of demand and supply,
Supply.
meaning
Yeah.
that the increase in Bitcoin price is not just the media hype, but it's also some, so to say, fundamental factors.
Okay, so basically we have here that what unlike many people think that Bitcoin is just a hype that is coming, a
Yeah,
big bubble, this
yeah,
has really well-founded reasons behind their price
yeah,
increase. So we talk about the stability of the infrastructure, we talk about legitimacy from other institutions, and we
yes,
talk about halving.
that's correct. Yeah.
That's great. And really, as a person that normally I come from Venezuela, and in Venezuela there's a lot of hype for cryptocurrencies right
Okay.
now. Electricity is cheap, so many people try to mine.
Yeah.
But I always been skeptical.
Hmm.
But now I kind of looking into accept the Bitcoin as a thing, just because
Yeah.
I know how many objective reasons are
Okay.
behind it.
Exists. Yeah. Yeah.
And just to make a little assessment, because financial theory and financial markets are quite complex
Hmm.
by themselves,
Yeah.
but I wanted to take from you, as a financial expert, as a person from the Willy Brandt School, I wanted to know what you think it will help, which policies, which rules or recommendations would you give to help reduce these fluctuations, these hard fluctuations in the markets that tend to make more damage than help,
Hmm.
because we all get crazy when a market crashes,
Yeah.
and we don't really like that. So
Yeah.
what would be your insights of what are the main flaws that we
Yeah.
see in the financial markets from this crisis, and how can we solve
Yeah. If I was a policymaker,
them?
actually, I guess I wouldn't introduce any changes to reduce those so-called dramatic fluctuations.
Why
I
so?
think, yeah, well, because I think, first of all, the regulatory bodies around the world, such as SEC in the US, BaFin in Germany, FCA in the UK, they are already constantly doing more than enough to keep markets stable and prevent market manipulation and to ease the effects of market crashes.
Okay.
Moreover, if not all, but most of the exchanges are, or stock exchanges are already equipped with their own internal anti-volatility mechanisms to prevent
Okay.
unnecessary volatility. For example, the German exchange is using the so-called volatility freeze mechanism for every single instrument. So if a certain stocks exceeds the amount of allowed volatility, the
Okay.
instrument will be frozen and the exchange will interfere and investigate what were the causes of this volatility.
Okay.
The US exchanges have the so called circuit breaker mechanism to prevent volatility. So if, for example, the index SPX 500 goes 5 or 10% down, the trading among all instruments will be halted for a certain amount of time. If this repeats 2 or 3 times, it keeps on going 5 or 10% lower, then trading should be suspended for the whole day. Recent example, the sharp fall of SPX 500 as a result of the COVID pandemic back in February 2012. There they had circuit breakers working like with a steam. In addition, all exchanges have trading surveillance departments, which have competent staff who are analyzing order books from day to day to find any cases of market abuse or market manipulation. I personally believe that volatility like the one in Bitcoin, even the one in GameStop, as long as it's legal, should exist in the markets. Otherwise, markets will no longer be so thrilling and exciting because if you look at Bitcoin, we have mentioned that already, the rise in its price is really based on the collective opinion of the market. So it's not some kind of market abuse or manipulation. And for, like we said, for every increase in Bitcoin price, there is a reasonable explanation. But what I would actually do if I were a policymaker and as a former public policy student is actually make sure that retail investors should be offered early and continuing education. I am not that much concerned with institutional investors, the big guys, because the big fish, because I think, well, actually, it's a fact they're in the business for a long time. They know the risks. They have a lot of money, so they can afford a couple of cases of a short squeeze. Moreover, since they are very well diversified, they will compensate for every short squeeze with a couple of big and successful trades. So it's the retail investors whom I'm concerned with. It's people like you and I, the teachers, the students, the flight attendants, retail shop consultants, you name it. It's those ordinary people who don't have any financial or trading education. They maybe heard about stock markets from a friend or a neighbor. They heard you can get rich in the market very quickly, so they bring their last piece of income, invest in a buzz security like GameStop or Bitcoin, and then they lose all their money when the instrument goes into correction, which is quite normal for an instrument to do. So it's for those, so to say, unprotected investors that I think the governments need to introduce financial literacy and or trading education already in schools or universities. So people not familiar with trading need to be explained the differences between short-term and long-term trading. They should know what kind of securities and assets are there to be traded. They need to be given knowledge about risk management, diversification, or that it's a bad idea to invest all your money into a single stock. More importantly, they need to be told that there is very little evidence that you can become rich quickly through trading, and that it is really, and that it's really hard work. Just like it takes 7 years to become a lawyer or a doctor before you start earning a very high salary, it also takes quite a long time before you start making consistent profits in the stock market.
Okay. First of all, let me tell you that I love that answer. The fact that you are taking care of the persons that the people that normally are not looked for in the financial markets. I think it resonates a lot with Dr. Sheila from the University of Harvard that really talks about helping those that need it through education, through funds that compensate when they lose, that kind of stuff. It's really important, and it's great that you bring it into the board here with this podcast. I don't want to take more time from you, Bakhtiyor, but I want to thank you so much for this interview. It was super helpful, super instructive, a little complex, I must say. It was quite technical, but I think our listeners will be really happy for it. Thanks a lot for being here.
From my side, thanks a lot for having me. I enjoyed it as well. Those were very interesting questions, and in general, I find this idea of podcasting very nice. And I wish you success in the future. I wish you more interesting topics and also very interesting speakers with different backgrounds for the benefit of your listeners.
Thank you very much.
Wow, it was great to have Bakhtiyor in the studio. What was most striking to you about the things he said, Jesus?
Well, there were many interesting things, but I think the most striking to me was the fact to be honest. The first is the fact that Bitcoin is not only a hype thing. That's what I always thought. That is what everybody getting invested in, like kind of these Dutch kind of fever for flowers. But at the end of the day, no, they have a lot of infrastructural and legalization and normalization of the Bitcoin that makes its price go up, and that's super interesting and makes changed my perspective on how much of an asset is Bitcoin instead of like a financial kind of crazy gambling. And the second thing is when he said, well, we already have a lot of good policies for reducing cyclic crisis. We what we need is education for the layman if we want to include people in the financial market. And I think that it's so true, and yet it is so hard to think about it because you are so invested in this idea of, well, we need to reduce financial crisis and these big ups and downs. And that's like, no, that happens in markets, but layman people do not survive that, and we need to make them learn how to do so and protect them from that. And to me, it was simply mind blowing, that part.
Agreed. I think it goes back to what I said earlier in the introduction about finance being a very opaque subject, and we need to find ways to make it more understandable to people so that they're not affected by these ups and downs that we see.
I completely agree with you. And well, that was our episode of this month. It's so good to be back, and we have some amount of announcements to say.
Yes. Well, most importantly, we want to welcome all of the new students to the 2021-2022 school year. We're so excited to be back in person in classes, um, and and we want to warmly welcome all of the new students this year.
Yes, it's so good to have them, and not only have them, but also to see them in person. Now that we have these new regulations that allow us to have presential classes. And I think another great thing to say is that the Willy Brandt School Bulletin Podcast is gonna start looking for new people to be interviewers, or to become part of the editing team or the contact team to the interviewees. So if you are interested in becoming part of the Bulletin Podcast, please stay tuning in the Willy Brandt School different social media, because we're going to be announcing the procedures quite soon.
Yes, you'll hear from us soon. Well, I think that's it from us. Have a good week to everyone, a good month, and we look forward to hearing from you soon.
Thanks a lot, and this was the Bulletin Podcast. Bye bye.
Bye.